Well, news just in. Inflation pressure in the U.S. easing slightly. Inflation rose less than expected by 8.5% in July from a year ago. That's easing from a near 41-year high in June, which was at 9.1%. Falling gasoline prices are a big factor, while easing supply chain issues also helped. And the latest print is taking some pressure off the Fed Reserve when it meets in September next. It's also prompting cheers from investors, with the Dow futures rallying by nearly 400 points. And Will Denslow joins us now for a closer look. Well, Will, better than expected slowdown, but given the latest print, is it too early to say that inflation has peaked? I mean, there is still a lot of uncertainty, especially with geopolitical situations threatening energy prices.
It certainly is better than expected news. Many economists are expecting the consumer price index for the month of July to come in around 8.7%. So this 8.5% reading certainly better, especially considering that it was up at 9.1% for the month of June. So certainly some room for optimism, but of course, there is a long way to go. The Federal Reserve has reiterated time and time again that they want to see inflation at around the 2% mark. So this is just the start, they hope, to be a long road to recovery. Of course, some analysts have speculated that this could be with us, this elevated price pressures with us for years rather than months. So we can certainly expect to see the Federal Reserve to keep its foot on the gas going forward. When it comes to whether this is the peak, well, as you rightly mentioned, there are a lot of variables. Gas prices have now been on the decline here in the US for around 2 months, but of course that can so easily change considering this is tied to a number of geopolitical factors. And there are a number of major issues that can also play a role. Things like food prices. Rents remain stubbornly high here in the United States. Rent is a massive contributing factor to inflation. So analysts, the Federal Reserve as well, will be hoping to see signs that some of these massive price pressures will begin to ease before the Federal Reserve, I think, can begin to consider whether to take that foot off the gas.
Well, then do you think the U.S. Inflation Reduction Act will have any effect on price pressures, say in the short term, which is obviously most urgent for now?
Well, the name of this bill is somewhat of a misnomer, the Inflation Reduction Act, and it does seek to tackle price pressures, but perhaps mostly in the long term rather than in the short term. For short-term easing and cooling of price pressures, well, that really is the job of the Federal Reserve, and raising interest rates, of course, is the biggest tool for them to do so. We largely expect the Federal Reserve to raise interest rates by at least 0.5%, maybe even 0.75% when they convene in September. So all eyes will be on that. But when it comes to the Inflation Act, the Reduction Act, well, that could take several years before it starts to impact things like lowering drug prices.
Oh, thanks for that. Will Denslow there in New York.